first thing we had this morning was a report from CONAB. CONAB is the Brazilian version of the USDA, and they put out production numbers much like the USDA does. However, they only cover Brazil. And this morning, soybean production came in at 152.89 million tons. That was actually down a little bit from the last report. They were coming in at 153.28. And as you can see, they did push yields down well, actually, they raised yields, but they cut down the planted acreage a little bit. Now, acreage in soybeans in Brazil is something that's been a hot spot. They have over the last 2 years turned a lot of pasture land into land that we can use that they can use for agricultural production. So that means their production numbers are going to be going up. I have a little bit of better news for the fans of the corn market here. Last time around, they were looking for 126.85 million tons of production. This year we had 120, now last report at 123.74. They noticeably cut harvested or planted acres, but they did increase production a little bit. Now, there's something to keep in mind about Brazilian crops. Historically, when we move into harvest, they do tend to get a little bit larger. So while we did see a little bit of a cut now, as they start harvesting this, we could see these productions come up a little bit, so that would not be a surprise. I'd also like to point out this is a record amount of production for Brazil. Their crop had obviously much better weather than they had last year. Also, there weren't any fertilizer issues. Brazil was able to acquire all the fertilizer they needed, and that obviously is going to help with their production. Why we're worried about this is this can affect our export numbers, and that is going to be for today's WASDE. The biggest concern is that we will see a drop in exports for both corn and soybeans. The production numbers, those usually do not change after the January report, so we should expect those to be unchanged, but we are going to be watching the export numbers will be a big issue. And for soybeans, something new, watching the crush numbers very closely. With the biodiesel situation being what it is, we are processing more soybeans and we're running at capacity, and we do have some additional capacity coming online. Crush margins have been very, very good thus far, and that is allowing for more soybeans to be processed. So that is something, again, on the bullish side. And along with that, we're doing a little bit better of a job exporting soybean meal. So that is something that is supportive. Now, for today's report, things that we look at are expectations. Right now, corn ending stocks for the January WASDE came in at 1.242 billion bushels. We expect that to go up to 1.273 on this report. So looking for a modest increase in ending stocks, meaning we will have a little bit more corn on hand. This is not a big increase and would not be that big of a market mover if we hit it. A surprise would be a number, say 1.3 or larger, but a bullish surprise would be anything smaller than the last time around. So if we saw this come in at 1.230, that would be an indication that supplies are a little tighter. Maybe those export worries are abating a little bit, and that would be something that the market would see as being bullish. For soybeans, ending stocks last time around were at 210. This time we're looking for them to be at 211. This isn't a big change. When I did my balance sheets, I didn't really see much of a change going on. Looking at exports, probably not getting changed this time around. Usually they increase exports a little bit on this report, but again, not seeing anything that's too big of a surprise. For the wheat numbers, we're looking for wheat ending stocks to be at 574, and that's up a little bit from 567. Again, not that big of a number. And the concern is here, as you can see, exports being a little bit lower. When we're looking at soybean exports, they're pretty much right on line with expectations. And for corn exports, losing 25, and that would account for the increase in the balance sheet. So we'll see how that part of things play out. Looking at the cotton market, last time around we were at 420. Expectations were at 408 as an average. I did not change my ending stocks number for cotton in my estimates. I don't really think we're going to see that big of a change going forward. And with cotton, we're very dependent on Chinese exports. That's the big variable, what we send over there, Chinese imports, excuse me. So if we don't see a change in that, I think we'll probably see a flat number. If we see China reopen over the next, let's say 6 to 8 weeks, there is some room for improvement for both corn and soybean exports. Also, we've been doing a better job the last couple of weeks with export sales. We saw China back in the market and actually buying some corn, and that will help. That's the good news. My concern, on the other hand, is that we are looking at a situation where they did not come in and buy as much corn after Lunar New Year as they normally do, and I think they're feeling more confident that they're going to be able to get this corn principally coming out of South America. The WASDE will also talk about South American production. And if we go down here, we can look at Brazilian soybean production. The USDA last time around was at 153. Estimates are for them to be little changed, 153.21. I did raise my estimates for production a little bit, given the strength of their crop. For Brazilian corn, we came in last time around at 116. We'll see how much that actually changes. Argentina is the bullish fact here. Soybean production last time around was at 46. We're looking for a bigger cut. We're looking at that to be cut down to 42 million tons. If we see that drop a little bit more, that will be beneficiary both to crush margins and to soybean meal. Argentina is a big exporter of soybean meal, and their crops are under considerable pressure this year. And that is good for the soybeans, not just now, but going forward, as once we establish new customers for soybean meal within the export corridor. For example, exporting into the Netherlands, into Northwest Europe, into the United Kingdom. This is something that over time will help us with soybean meal exports. One thing that we need to be looking around the corner at is this increased soybean crushing capacity. We're going to be producing more soybean oil to meet the mandate. That also means we're going to be producing more soybean meal. So we're moving away from the old paradigm of processing soybeans mainly for meal and oil as a byproduct, where they're going to be on a little bit more of an equal footing. And that may change some of the market dynamics a little bit, in that we will see more soybean meal in the market that could pressure meal prices as this production comes online. But again, that's something not for this crop, not really so much for next crop, but the crop year afterwards. So this is something to keep in mind. This is something that is going to actually be good for inflation numbers, as we're seeing the cattle herd decrease a little bit. Typically we trough, and then we'll see that increase. And if we have lower meal prices going forward, that's something that could increase cattle production in the U.S. So those are the big dynamics that we're looking at for today's report. Let's take a quick look now at the markets and let's see what's going on. Corn market is typically, as we expect in front of a report, we're fairly quiet. Right now we're up 3.25 cents on March. And if we take a look at December new crop, which is where most of our newfound worries really are, December corn right now at 5.93 is actually down 1/4 cent. Something that I've noticed over the past, let's say 6 weeks, is there's something called a bearish divergence going on. We are seeing old crop prices remain fairly stout and fairly firm, and rallies holding, whereas you can see we're beginning to see some congestion develop with the new crop futures. Now, new crop futures for December, this is the best price we've ever seen in December, for December futures at this time of year, so that's something that is beneficial. Now, the last 3 or 4 years, we've seen nice springtime rallies, both in corn and soybeans. Will it happen this year? I have concerns about that. One, those rallies all occurred when we were in a bullish paradigm. We were looking at ending stocks being stable to lower. Now, when we get the May WASDE and we take a look at what next year's ending stocks are going to be, they are invariably going to be higher. We're going to be looking at, struggling with exports a little bit because of better South American production. we are going to be struggling a little bit on consumption as we see the the cattle herd get a little bit smaller. We are also probably not going to see any big bump ups in ethanol production. The ethanol boom has come. I don't see new ethanol capacity really coming online, and we may actually see those numbers drop. If miles driven go down a little bit, those have not gone up very much. We haven't seen any sort of generational increase, and with an aging population, that can go down along with it. We are beginning to see more of those electrical vehicles around, and those aren't going to go away, especially in coastal areas, on the West Coast in California, and also on the East Coast of New York, where you don't have a lot of long trips, but you have a lot of short trips, or EVs are not going to be not going to be a problem. Now, moving on to the soybeans this morning. March soybeans at up 7.25 this morning. We are doing a little bit better here with the March beans. And as you can see, we've had a pretty good uptrend, but we've hit a bit of a wall here, and that's at about $15.50 a bushel. And that seems to be pretty good resistance, and it would take, a pretty good surprise, I think, for us to punch above that. Now moving on to the November new crop soybeans. And again, that same bearish divergence that we've seen in corn is also in play here with the soybeans. And we are underperforming a little bit. We've had a nice little rally off of the lows, but again, we're starting to find some resistance, particularly this yellow line is the 50-day moving average, and we're finding that to become resistance. And if we can't trade above those moving averages, the speculative funds are not going to be as inclined to come in here and buy soybeans. So unless we see again a shift, we may be looking at a noticeably different paradigm for the 2023 growing season. Make sure you are subscribing and reading the daily market outlooks every day. I cover the export situation and everything else going on in the grain markets. I also take a look at all the outside factors, looking at things like energy prices, interest rates, equity markets, to make sure we have a good fix on what the global macro situation is, because if we see things like an economic slowdown, that will have an adverse effect on the value of the dollar, and that in turn can also affect prices. Looking at wheat, the wheat market has not done much. We are peaking and popping up a little bit today. Geopolitical concerns are something that drive this. There is a big fund short position right now in wheat that can be fuel for a rally, but we can't really count on it. Every time it bounces, there seems to be somebody willing to sell it. And with today's WASDE, it's doubtful that we're going to see any big surprises, so we may not get any fresh bullish inputs here really to drive things. And we're now about 50 seconds away from the report, and the markets remain quiet, and we should be getting our numbers here in about 45 seconds. As far as other markets this morning, we're seeing some selling going on Wall Street. Crude oil is up for the third day in a row. We bounced off that. We got close to $70 a barrel again, which is going to prove to be very big support, I think, for the crude oil market. On the good news, we aren't seeing a lot of upside. There's not been a lot of aggressive buying or anything to push prices higher. So as long as we can keep energy prices under control, I think we can avoid any sort of big energy shock. So we are about 4 seconds away from the report here, and we'll see what we get here. And corn ending stocks at 1267. That is just a little bit below the survey, but a little bit up from the last time around. Corn exports remained unchanged. That's some good news. Soybeans, oops, we have a miss. 225 versus the expected, basically call it 210. So we did see that number pop up a little bit. Exports were actually left alone. So most likely we saw maybe a little bit of a change in crushing numbers, and that will, affect the markets. Let's take a look at here what the markets are actually doing. December corn is currently down 1.5 after the report. Most of the funds and the speculative money sit in the front of the market, and that's where we typically see the action. And The reaction, as expected, was fairly muted with what we expected. Moving on to the soybeans here, where we did have a little bit of a miss. As we can see, November beans coming under a little bit of pressure, and we're actually starting to break down that little tiny uptrend that we had going on. Moving on to the March soybeans, they're down about 5 cents, and they didn't really move too much with this report either, as again, there weren't a lot of changes. Moving on to the wheat market. We're up 5 3/4 on March. That's about where we were trading. Maybe we shaved a penny or two. And again, with the wheat, let's take a look and see what the report actually had for us here. Our total wheat ending stocks came in at 568, basically unchanged from the last time around. That would be a rounding error. So no big surprises there. Moving on to South America, Brazilian soybean production, 153, so right in line with expectations. Corn production, 125, again a big unch. Soybean production for Argentina came in at 41, so they did shave a little bit there. And moving on to corn at 47, that was down from 52 last time and a little bit lower than expectations. So if we wanted to sum up this report for the corn, wheat, and soybeans, not a lot of big surprises here. Everything pretty much running as expected. Now then, let's take a look at cotton here while we have a moment. And the cotton ending stocks number came in at 430. That is a miss. So we're probably going to be looking at a little bit of that extended pressure going on in the cotton market. And our production numbers are, our ending stocks numbers are a little bit higher. And here, exports again were left unchanged, and they did not change production numbers. Looking at the global numbers, corn ending stocks at 295 were a little bit under estimates, and soybean ending stocks at 102 were also a little bit under, and we can attribute that mostly to Brazil, or Argentina, where we did see numbers that were actually a little bit under. So, this report, generally speaking, I would classify it as neutral. There was no big surprises or big shocks coming for any of the items that we're looking at. Did we have any questions from anyone?
I do not see any questions out there yet.
We did not have any questions. Take a quick look at the markets here. Again, we're not seeing corn up 1/4 cent, so things are going to remain quiet. Now, as far as news events going forward, typically the February WASDE is not that big of a report. However, coming up at the end of February, we have the USDA Outlook Conference. Make sure you're reading the DMOs around that because I will be covering that. Coming up on March 30th, we'll have the acreage report and we'll see how that deviates. So what the conversation in the grain market is going to go from is we're now going to start debating acres, and are we going to see more soybeans and more than corn? And again, this is something that's going to be a moving target. Make sure you are reading the DMOs. Also, if you're not subscribing to our podcasts, there are links available in the DMO. I produce 3 podcasts a day, one in the morning going over early activity. I produce another one in the afternoon, rounding up everything else that's going on. And I also produce a livestock podcast that you can access that covers obviously everything that's going on in the livestock space. And we have seen a fair amount of volatility, and we are seeing some things shift there. So make sure if you're not listening to those, listen to those. Not only do we cover the grain markets, we cover the energy markets, fixed income markets, equity markets. Everything gets covered in depth, along with the currency markets. Because if you're not looking at everything, you're not going to have a full picture. And given the amount of volatility and sensitivity we have in the markets, we do need to be paying attention. So with that being said, and the markets being very quiet, and if we have no further questions, that will conclude today's WASDE report.